Well, in gloomier news, I'm so sorry, I don't really have a lot of good news tomorrow. Interest rates have been lifted for a 12th time in 13 months. It's leading all major outlets tomorrow. Let's take a look at how some of the newspapers around the country are treating this. I think the Tiser probably wins. Living the low life, can't afford your bills, mortgage and groceries. Welcome to the RBA boss's world is the headline on the Tiser. The Sydney Morning Herald, rates paying up and away. Reserve Bank Governor Philip Lowe has warned the country to expect even more interest rate rises as Treasurer Jim Chalmers distanced himself from the bank's decision to take the cash rate to an 11-year high amid growing risks of a recession. The Age have also gone with Lowe warns of more pain as cash rate at new high. And even the Canberra Times, screws tighten on borrowers. More interest rate pain could be ahead for borrowers after the Reserve Bank of Australia warned the highest official cash rate in 11 years may not be enough to tame inflation in the next 2 years. But it is really interesting because we've seen Westpac be one of the first out of the blocks to increase that rate hike. But interestingly, the same has not been impacted on savers and those that are depositing money. So it's interesting to see how the other banks handle this tomorrow. But it should be interesting that rent stress. It was on the front of the Australian today, and this is also now something that the Greens have been talking about. A lot of people were saying, banging on about, I was probably one of them, because we're waiting for that future fund legislation to hit the Senate once again when that resumes next week. But let's take a listen to what Max Chandler-Mather, who is the Greens spokesperson for housing, had to say on Insiders over the weekend.
Well, the Greens have shifted and now we'd like Labor too, and we've said two things. One, we'd like a guarantee of $2.5 billion of investment in public, community and affordable housing every year, and we want the federal government to coordinate a national freeze on rent increases.
$1 billion on the table from the feds is what the Greens want to basically encourage all states and territory governments to say enough with the rent hikes for a year. What's your take?
It's one of those easy policy solutions when there isn't really an easy policy solution. It's a shortcut that we see carted out a lot of times when rents are spiking and it sounds good. It sounds good in theory. We want to see our rents frozen. We don't want to have this increase, but that has a very dark route and it goes downhill pretty quickly. You start distorting the price incentives on the economy and it ends up with more expensive housing, less available housing for people at the lower end. We've seen cases where you'll end up with one person in a rent-frozen apartment in, say, New York that's living the high life and they've held onto that apartment for generations sometimes. And the landlord is just leveraging money. There's no reason to have that. Meanwhile, you've got overcrowding in the market-based apartments. So you end up with this whole problem with the economy.
Yeah.
It causes more problems than it solves, which can be very dangerous.
Yeah. Kel, is it sort of like the COVID impact again? It's sort of distorting the market so much that we won't even know what's real and what's not.
A half a $1 million mortgage, which is a fairly common sort of mortgage, and in Sydney it's a small mortgage, let's face it, now costs $1,000 per month more than it cost at the start of those graphs you saw on the front of the newspaper pages that you'll see tomorrow when the paper lands in your driveway. So from the start of that graph to the top of it, $1,000 or more per month. That's not imaginary. For the 1/3 of Australians who've got mortgages, that's a really big deal. It's $12,000 a year, and your salary hasn't got up another $12,000. And the Greens say the way to fix it is another $2.5 billion worth of government spending. Government spending pushes up inflation, and Philip Lowe will turn around and push up the rates further. So I'm sorry, no, up here for thinking. That's not a smart answer, is it?
No.